Property Unfiltered. Real investors, real stories, the good and the bad in property investing.
Hello everyone, welcome back to a brand new episode of Property Unfiltered where, as that jingle just said, we are talking through real investment stories, unfiltered, raw, uncut, basically a no BS show about buying and holding on to property. I'm Grace Ormsby. It's a pleasure as always to be joined by Housefinders Simon Liu, my co-host. Simon, how are you?
I'm very good. Thank you for having me. Very, very excited about this episode actually.
It's a bit of a full circle moment, isn't it, really?
Yeah, it absolutely is. So the very first episode I did for Property Unfiltered, I had a guest on called Michael Zia from Mortgage Channel. He's actually my broker. He's got an amazing portfolio of properties. He's done extremely well for himself. And during that episode, we talked about a mutual client where he bought 8 properties in the span of 7 months. And, we kind of explored a little bit about how that went about from like a purchasing perspective, a finance perspective. And even now, ever since that episode aired, I've been getting calls and people reaching out to me, I heard that episode. That was amazing how this guy did it. How did he do it? And ever since then, I was trying to get him on the show. And finally, we have him, the man himself, Huseyin. He's on our show today. And he's here to talk about, for sure. So he's here to talk about, just a little bit about his journey and how he began and more about his portfolio and where he's at the moment. So welcome. Thank you for joining us.
No, thank you for having me. It's a pleasure to be here.
You've obviously had a pretty chaotic few years buying as many properties as you have. For anyone who hasn't gone and listened to that first episode, go back, take a listen, probably before you even take a listen to this one, because it's going to give you the background to how this kind of all works together. Because you two didn't originally know each other. You knew Huseyin, you knew through the mortgage broker, or you got referred on to Simon that way. Yeah,
correct. I was looking to buy property in a place called Logan in south of Brisbane, and I was talking to my mortgage broker, and I was finding it very difficult to get in or even talk to real estate agents at the time because it was very hectic. And I asked Michael Shah from Mortgage Channel, do you know any good buyers agents? And he said, yeah, Simon Liu, straight up. And I said, okay, I'll give him a call. Before I did that, I actually stumbled across a podcast that Simon was on. And I listened to it and I thought, I might give him a call. And it was a Saturday. And I thought, I might give him a call. I'll try my luck. What the heck? So I gave him a call. He didn't answer. And I thought,
great start.
Yeah.
Great start.
But what happened was an hour after, he gave me a call back. And we had a chat. And in that chat, he did say, look, let's organise a proper meeting and then we can go through exactly what you want to do. But he just wanted to, like off the cuff, wanted to know what my goals were. And he gave me some really solid information, really open. And I was very impressed that, Simon just pretty much sort of changed in that conversation, changed my philosophy about how I would go about buying properties. And when I got that information and after the phone call, I thought, I think I'm gonna pursue, use Simon as a buyer's agent.
Now I'm going to get a lot of people calling me on Saturdays.
Yeah. Try Sunday.
So what was the philosophy before that phone call then?
So my philosophy is, and this is something I spoke to Simon about in that particular phone conversation, my philosophy was to buy a property and then add value to it, as in buy a property and then plonk a granny flat on the back. And this is what I have done in the other properties that I had. But when I spoke to Simon, he said, well, that's not bad, and it's not bad what you've done. And he gave me an example of something he did in Western Sydney, where he had a house and he put a granny flat on the back, and then I think he did a second one possibly from memory. And then, but what he said was, instead of doing the granny flat at the time and at the price point he was buying these properties, it would have been far better to buy a second or a third one straight out, because they were very neutral in return. And so thinking about, and then he said and then we looked at the prices of today, and the prices have gone everybody knows what Sydney did in the last 15 years, and basically would have had maybe $1 or $2 million in his pocket. So with that thinking, it was more so to buy neutral sort of properties in, say, Logan. Don't worry about, because you're buying these properties at the time at 300 to 350. Don't worry about putting the granny flat at the back and spending $150,000. Use that money to buy the second one and the third one and so forth. So that was and then it took me a while. To change my thinking. It was a bit of a like a paradigm shift in my thinking, and so I thought about it, and then talking to Simon, coming back and forth, and I thought, you know what, I think he's got a good point there, and sitting here today, I'm sitting on a lot more than I could have been.
It's interesting how you met me on a podcast and now you're on a podcast.
Yeah,
you met
honestly,
me hearing about a podcast. Listening to a podcast, and now you're here. So.
I used to listen.
Circle.
Yeah, I used to sit there, exercise in the garage, and I used to have these podcasts running in the background, and back after one after the other, and to be honest, to be sitting here just feels a bit surreal. I was listening to people like these stories, and now I don't know, become one of those stories.
Yeah, you're sharing it, and.
Yeah.
I mean, that is, I think, key to good investment, to realise you're not alone on the journey.
Yeah. And, I listen to these podcasts, and then, we've done, and we'll get to what I've done. But, what was I going to say? Sorry, I've gone blank.
No, that's all right.
But then to now become like one of those stories is, pretty cool.
So, I mean... Like a lot of people would know that you've bought 8 properties in the span of 7 months, right? Like, I think what might be super interesting is if we explored like the motivation behind that, because even if a lot of people had the capacity to do that, it's not something that people naturally just do back to back as well. And some of the properties we've bought has had its challenges, which we'll get into soon. But what do you think? What was like the turning point? Because at that point, I think you already had a few properties in Sydney as well, or
that's correct. So, this in like sort of early, I guess about 2017, 2018, I was our company went through a pretty serious restructure. And a lot of my colleagues were shown the door, and I thought, well, there's no reason why I won't be shown the door, and I'll be looking for a job, and a bit of fear sort of set in my in the back of my head, and like how I see my primary job is to put bread on the table, and I thought if they do show me the door, what do I do? So I thought I need to take some action. So I sort of said, okay, what do I need? My goal was I need a passive income. I need $200,000 a year or something, or, around that. And how do I do that? And at that point of time when I, spoke to Michael, I also heard Michael Shah on the podcast and what he was doing in Logan, and looking at the numbers in Logan and the prices going up, I thought, wow, this is it. This is the time to make that passive income. And to be honest, at that time, I thought that was the only opportunity, and it won't happen again. But it's not like that. There's always a next deal. There's always a next opportunity. So basically, to answer your question, in a short answer is it was a passive income.
Okay, cool. Cool. And here you are with the passive income.
Have you achieved that already? Are you at that point?
I would say I crunch the numbers. I crunch the numbers all the time. But if I'm going through a accumulation phase, and if I was to consolidate today, I don't think I will be just quite 200, but I'll be very close around the 160 to 170 mark with a little bit of a loan on my PPOR.
Yeah, nice. So that's passive income, 160K
Correct.
passive income.
Passive income,
and you've accumulated that in
a very short
in a
space
very
of
short
time.
amount of time. That's really good.
Yeah, and also that also includes some of the Sydney properties that I have as well. So in if I consolidate everything, it would sort of come to that value.
Well, I don't want to elaborate too much on those previous Sydney properties because it's very much, you talked about the paradigm shift and the change in thinking. But I am curious what your thoughts and feelings are around having those aspects and elements to your portfolio when that paradigm shift has occurred. Do you regret any of those purchases? Have you held on to all those purchases that you had made before that? Have you changed your thinking around what they can provide you?
You mean the properties,
the earlier ones?
Yeah. I every now and then I do think about selling them and then putting money into areas like the ones that we bought in, but I haven't taken any action yet on that because they're nearby. I can keep a little bit more control of them and things like that. But I have thought about it. But I mean, at the moment they're doing okay. They're doing well, and only because after so many years, the yields are much better. So I just keep them. Yeah.
So you don't necessarily have any reason to sell them as yet. And it sounds like I know for a fact that you're still looking to accumulate.
Yeah.
It's a disease.
I am.
You've got the property disease.
It's very contagious.
I've been bitten by the property bug, and I don't want to sell. Unless I have to, and I don't want to sell until I get to that consolidation phase of when I say it's done, I don't want to work anymore. That's when I start selling off and paying down debt, and then sitting on yields without any interest to pay. So because I don't want during that phase you don't want to be subject to interest rates, and the best way to do that is obviously to pay off your debt. So,
tell us a little bit about like your personal life, like in terms of your job and. I think that's quite interesting because a lot of people are probably listening thinking, oh, wow, a big portfolio of properties, 160K passive income within just a few years. Like, are you a super high income earner or are you,
No.
who is Huseyin?
Who is Huseyin? Well, I'm sort of third generation. My grandparents migrated here a long time ago. And I have 2 kids and a beautiful wife. I'm pretty average, really. I don't have any extraordinary hobbies or anything like that. I'm an engineer, electrical engineer. Did go to university, did that kind of thing. But, engineers are not really known for being rich by any stretch of the imagination.
But they do okay. I think they do okay.
They do, we do okay, but, it's sort of a bit above the average wage, I would say. Because I earn what I earn, this is not the product of that. If there's no direct relation. It's more the action I took and the focus I did it in, and used that wage to accumulate this.
Yeah.
And if someone like me could do this, anybody out there can do it. And even if they earn less than what I earn, I'll be open. I've earned 190,000, and at this time when we bought this, I think it was on 180,000. But even if you earned half that, then you would have done half the properties. You're still light years ahead of anyone, and you still secure your future. So
it's a good point. And even, I guess moving on from that, are you happy with being at work? Because so many people, their property investment journey is to get them away from what they were doing. Case in point, Simon. Are you of that mindset, or is it a different mindset for you going through this?
I don't. It's not that I don't like working. I do like working. I work hard, but it's more of that safety factor. I don't think about retiring. And I don't think about stopping buying property. I think about doing more, and as much as I'm able to, I will continue. But it's more of a safety net. If something does happen to me, or something, or I lose my job or we go through a downturn or whatever, at least I've got something to fall back on, and so does my family, and it's more about that. Yeah,
peace of mind, I think.
Yeah,
I think that's
pretty
what,
much. Yeah,
a lot of people are after.
And options.
Options as well.
Yeah, pretty much.
I talk to people every day, about what they want out of passive income, and 99% of them say, so I can stop working one day. I've never met anyone who's actually achieved passive income to be able to stop working and then they stop working.
Yeah.
9 times out of 10, they actually have to work harder.
It's a paradox, isn't it?
Yeah, because at that point, all you see is opportunity, because you've kind of done it, you've achieved it, and you're thinking to yourself, what if I just, what's next?
Yeah,
what can
it's
I do
always
now?
moving goals.
Yeah.
Yeah, like, you buy 5 properties and that's, your goal, and then the next thing is like, I want 10. And, I want... And people,
not even that as well. Maybe the personal goals. A lot of people have always dreamt of doing things that does not bring them any sort of financial gain, and whether it's a hobby or whether it's like something they're super passionate about, they can pursue it. If not temporarily.
And as you said, it creates a lot of opportunities. You don't have to work. You can go pursue your hobbies if you want to. You can still work and grow your portfolio. And that's what I'm doing.
Yeah. So the aim was for $200,000 passive income, but I feel like at the point you're at now, has it stretched out now? Is the goal a bit different?
Yeah, the goal it's always moving. It's always going.
Your goalposts are moving further and further away.
Yeah. Well, some people say to me, look, haven't you done enough? Like you've achieved what you've wanted to do. And I just feel like, in the back of my mind is if you want an extraordinary life, you have to do extraordinary things, and there's no like shame in that. And this is what I want to do, and I want to grow this portfolio, and one day I'll have enough passive income to do whatever I want, and that's the goal.
And also get a sense from you as well. Like after obviously we've had so many conversations just during the buying process, but outside of that as well, we talk from time to time, just non-property related.
Yeah.
Our families have met. We've gone out to lunch.
Yeah.
So
he shouted me lunch.
Oh, nice.
I think I had to after 8 properties.
Yeah. Another lunch after this?
I think so. Maybe dinner. But no, it's just like I think what the sense I get from you is you actually enjoy it.
Yeah.
Yeah,
so
I get that sense too.
It's not just
Very
about
much.
making, the bottom line and getting as much equity and as much passive income as possible, because at some point in time, like, once you've fulfilled your goals and enough is enough. But what actually keeps people going is just the thrill of, making a deal work, or the thrill of, let's say you get enough equity to buy like a dream home, or to get into like development or commercial, like large scale commercial properties or whatever the case may be, right? So I think that's ultimately what drives you, and it's like perhaps even like chasing the opportunity of growing yourself mentally, emotionally, and I think that's ultimately more fulfilling for me anyway. That's what's happened. So
yeah, it's definitely a passion there. Like it's there's, you always think about it. Like it's always at the back of your mind. My brother-in-law, he's sort of similar to me, and this is all we talk about. I don't know. We love it.
I feel like as well, it oftentimes comes back to, obviously, you've done electrical engineering at uni. You work in it every day. You are problem solving day in, day out. You're kind of doing the same thing when it comes to your property portfolio, but it's more proactive rather than maybe reactive. Like thinking outside the box, creative ways of going about building out that portfolio. Because let's face it, you don't get that many properties in such a short space of time without creative thinking.
Yeah, I totally agree with that. As you said, as an engineer, we're very logical. We problem solve, and usually we solve problems in advance. But this was sort of on the fly, very quick thinking, very focused. And I've heard Simon talk about this in the past. And there's a lot of white noise that goes around you that you need to be able to block out. In the past of, people have said, oh, no, don't do this, no, don't do this. And everybody thinks they're a property expert. I'm not saying I am, but everybody else thinks they are, and then they tell you what is right is what and what is wrong. And I
think you're qualified now as a property expert.
I mean, Simon, you're basically training up all these people as elite athletes.
Yeah,
you
yeah.
know, ignore the white noise. Don't worry about what anyone else is doing.
Yeah.
Focus on your own thing.
Yeah.
Like, and I can see that kind of comes out as well.
Because some of the properties we've bought, like they're not flash.
No.
I would say some of them are the opposite of flash.
And what word can you use there to say is the opposite of flash?
I would say they're very, some of them are quite bare bones. Like one example is a house that I remember we bought in Logan Central, and it was a property where the tenant inside the property has been there for 35 years or something like that.
Yeah, since the early
Just a
90s.
super,
Wow.
Yeah, and we didn't know obviously what was before it, but we believe that they've been there even longer.
Yeah, I
But,
think their parents also lived there.
yeah,
You're joking.
Yeah, it's like generational, and they've just lived there and they've rented this property all this time.
So if you can imagine like a house that's been lived in for 35, 40 years, by the same family, original house, really, and the tenant living there now is older, as I
Yes.
understand it. So
Yeah.
their
So
ability
you've still
to
got the same tenant
Yeah,
in there?
yeah.
same tenant. But I would say like maybe because they have been a bit older, like the general upkeep and the maintenance hasn't really sort of been consistent, especially in the latter years. So, and the house condition reflected that, right? Like
Yeah.
there was nothing wrong with it. The bones were fine, but just cosmetically it was a little bit.
like there was wallpaper peeling off kind of thing, and the bathroom needed a bit of a reno. But interestingly, the tenants didn't want me to touch it. They were like, just leave it the way it is. And I was like, okay,
They're comfortable.
they're comfortable. They were basically, look, we'll pay the rent. Just leave us alone.
Yeah, wow.
Now I get it. They didn't want a rent increase, I think. That's probably what they were thinking.
That is true, that probably was what they were thinking. But I mean, market rates are market rates.
Yeah. But yeah, all these properties that I've printed out a list of the ones that we bought. Even negating the numbers, we'll run through them just really briefly. But I'm looking down the list. There's probably one or two properties here that you would consider like a newish sort of nice looking type of property. The other ones are all kind of 20, 30 years old, 3-bedroom, that type of property. But we got them at such low prices at the time, and looking at the amount of equity. So before we came on the show, we did bank valuations on all the
cool.
properties. So we've got all the numbers here.
We love these kinds of episodes.
Yeah, so we can go through all the numbers. So the very first property we bought was in Eagleby, in Queensland. We paid $340,000 for it. That was bought in 2021, in the 2021, and the valuation currently is $550,000. So there's about $158,000 worth of equity there.
Mm-hmm.
Second one in Crestmead, in Queensland. We paid $350,000 for it. That was in the same month, and the valuation today is $589,000. So there's about $230,000 of equity there. The next one's in Beenleigh, again in Queensland, in the Logan area. We paid $340,000 for it. That was in October 21, and currently the valuation is $523,000. So there's about 166 there on that one. And then another one in Crestmead, that was in November 21. So you bought a lot in the space of a few weeks. The purchase price on that one was $365,000, and the current valuation on that is $563,000. So there's $193,000 there. And then the Logan Central that we just talked about, we paid $350,000 for that one. That was again in 2021. Now the valuation is $570,000. So there's about $211,000 there.
Without
roughly.
anything being done.
Nothing done.
No,
Yeah.
no, nothing.
Are
work
all
done
of
on them.
these properties without anything being done?
Nothing major.
Yeah.
Yeah.
Like I maybe I've changed the carpet in one, or did some painting in something, but nothing over $10,000.
Yeah.
And that's only for the ones that needed it.
The cosmetic stuff,
Yeah,
just
yeah.
as opposed to structural.
General upkeep, maintenance,
Yeah.
that type of thing.
Yeah, pretty much.
And then Redbank Plains in Ipswich, that was in 2022 in February. We paid $350 for that, $350,000. That one's currently valued at $562, so that's $203K of equity. And then Goodna, again in Ipswich in Queensland, we paid $340 for that. That was in April 22, and the current val on that is $459, so there's $150K there. And that's when we moved to Perth, I believe, because that's when we started buying up in Perth as well. We were kind of noticing that there was quite a little bit of growth happening there. A lot of people started moving out there as well.
Yeah, and then by that time, Brisbane or the south of Brisbane started getting
a bit expensive.
A bit expensive very quickly. And then, all the hype was now in Perth amongst the investors and things like that. So
yeah. I mean, we started noticing a lot of owner-occupiers moving out there. So that's when we kind of clicked that, maybe this boom in Perth isn't really mining-driven. And it appears to be that way at this point in time as well. But yeah, we bought in Armadale, which is a similar to Logan area in Perth. And we only paid $297,000 for that house in June 2022. And the valuation on that is already $481.
Joking.
Yeah.
So that's $176K in about a little bit over a year or so, I suppose, 1.5 years, that type of thing.
And Perth is still going pretty strong at the moment. So there's more in that.
And then finally, another house in WA, Mandurah. We paid $310,000. That was actually a triplex site, so you can develop on that one. That one was done in July 22, and the val on that's $444 at the moment. I reckon a lot of these vals are actually conservative because we're still buying in a lot of these suburbs, and we're paying, even though we're getting good deals, we're still paying higher than a lot of these lot of these numbers. So, I think during a boom cycle, as rapidly as Perth has grown, I think banks tend to take a step back in terms of how they value properties, and they tend to be a lot more conservative. But really good results at the end of the day.
And bank evaluations are always conservative.
Yeah.
So on the real market, real value, they're probably a lot more than that.
Well, just given how tight vacancy rates are, and then how tight the supply is too.
Yeah.
It's insane at the moment in both of those areas. You're on winners for all of those. That must be music to your ears, Huseyin, to hear about all that equity that's sitting in your properties.
Yeah. Oh, I mean, yeah, it is. Yeah, I'm looking at these numbers and I can't, you can't believe them. And it's like, wow, just music to my ears. And
totally 1.6 mil, worth of equity spread across 7 months of buying. I mean, obviously markets have grown a lot since we bought the last one. But plenty to take out. Like if you wanted to, you could sell down a bunch of them.
Yeah.
And have a bunch just fully paid off now, giving you passive income. So, dream would be realized, I suppose, in terms of the passive income goal.
Yeah, I crunched some numbers earlier, and if I was to sell just the ones we bought in that period, I would have close to about three of those properties paid off.
Yeah, wow.
And you're talking about $400 to $500 in rental. So $1,200 to $1,500 a week.
Yeah, nice.
There's that flexibility and that safety net that you were talking about.
Yeah, achieved in a short amount of time. But I couldn't have done this by myself because I tried.
Yeah.
I tried calling agents. I tried to talk to them, and I couldn't have got them at the prices that Simon found them for me. So,
I mean, the common denominator with all these deals is that they were all, number one, off market.
Yeah.
And there was something about the situation where they had to sell relatively quickly. I remember with each of them. I remember some of the ones, especially the Mandurah one, that was a triplex, and I believe the Logan Central one that we talked about. We were given a very short window to buy it. I forgot what the situation was. It was many years ago.
Well, it was during the height of COVID too, really. It was in that period.
Yeah.
We'd been in lockdowns. There was a lot going on across the country at that point in time. So
Yeah, and look, I mean, these situations, you know, people, like, for example, it's very difficult to sell a house that has a tenant in there. You know, like that Logan Central house would have been a real challenge to sell, not only from a presentation perspective, but also getting access. And, you know, I'm almost certain the tenant would be very reluctant to have the property sold publicly. You
Especially
know, where
if
people are going
it's-
through, and maybe they have the fear that they might get kicked out if an owner-occupier decided or a developer decided to bulldoze a relatively old house and put on a new one. So a lot of these situations lend themselves to sellers preferring to just a quick and easy sale, especially if they need money quickly. Otherwise, they might have to wait, you know, 8 months or something for the lease to expire, and then give the notice to vacate, and have to fix up the house and all that kind of stuff. And I think a lot of sellers just don't have that luxury. So yeah, that's kind of where we got a lot of these deals from.
And I do remember one of the Crestmead ones, this one, Mile Street. I remember getting a phone call one night at around 6 or 7, and Simon said, "We've got this really good deal. I'm going to send it to you. You got to let me know in an hour or two." And I'm like, "Really? All right." And because because we've bought a few before, I knew what to do and what to look for and whatever. And I did all my own due diligence, and then I called him back and I said, "Yeah, let's do it." The deal was too good to let go. It was in Crestmead, a pretty good area in Logan. So,
I mean, you just look at the numbers sometimes and go, you know, like when you say yes, let's do it. Like, because we are operating off markets, we've still got the building and pairs and the finance. So
yes, of course.
You're not just like jumping in saying, yes, I'm buying it, you know, with no due diligence. But I guess at that point, with urgent deals, locking it in is super, super important. And I think that makes or breaks, because by the time you sit there and for an overnight even, you know, or a couple of days, it's sold to someone else.
Yeah.
Somebody else comes in and puts in their deposit before.
There's a lot of deal hunters out there, not just us. So yeah, no, I think being able to move quickly, you know, recognizing what a good deal is, I think that's been pretty paramount. But having a good broker, I think, is, you know, like I said, you know, you came referred from Michael, and Michael does wonders for you and plenty of our clients, including myself. You know, he's my broker as well. We've just refinanced a bunch of properties to go for more as well. So, like, having solid people around you, I think makes a big difference for me as well. You know, as well as I'm still obviously an investor. So yeah.
Yeah, I totally agree with that. You need to, I guess, surround yourself with a good team. A buyer's agent, mortgage broker, very important. Michael's done a fantastic job. Really nice guy, hardworking, and a good property manager. You know, because
absolutely, property managers are so underrated.
Yeah,
they can cost you thousands at the drop of a hat.
Yeah.
You know, if they didn't send a notice in time or something like that.
Oh,
so,
totally. Yeah, you need a good property manager who's on the ball. You know, and then you're good. But
tell us about the Woodridge house.
Yeah,
Remember the Woodridge house that we had, but it kind of fell over.
I cannot
think that's
forget.
an interesting story.
Oh no!
So this is an interesting story. I would probably say it was kind of bad for me, but I mean, and probably, but showed me something that I thought, you know, it proved something to me. And what it proved was we bought this property in Woodridge for $400,000 at the time, and you know we did everything and it was very good. And right at the end, it was right near Christmas, and the financial institute who was lending me the money had skeleton stuff on, as well as at the time Queensland wasn't using a particular system to do the processing of the property. You know, they haven't gone across to the settlements haven't gone across to PEXA from memory. Anyway, the vendors realised that there was a delay, and their solicitors said to them, "Look, you can pull the property off and you know, try your luck." And they did that, and they didn't want to. And when they did that, and because there was a delay, they kept my deposit. So I remember it was $15,000. They kept my deposit, and they put the house back on the market. So I think so they put the house on the market and they sold it for $450. So there was you know, proof in the pudding that we did buy the property under market. Like that, Simon found that property under market
Yeah.
by $50,000. And but the $15,000 I lost, we got it back through insurances. So Simon and the solicitor at the time
Yeah.
really helped me through that. And it was a bit of a stressful. Nothing goes smoothly, but
Yeah.
at the end it showed me, hey, we're actually buying stuff on the market, and I got my money back, so we just went on to the next one.
Yeah, I
Yeah.
think that's a really good story to share because, it's not all roses and daisies. When we invest in property, I think a lot of people see people grow big portfolios and they think it's a walk in the park, but these things happen to everybody. If you buy enough properties, you're going to be exposed to literally everything, whether it's bad tenants, maintenance, whether it's property downturns, whether it's properties falling apart during the buying process, things that are completely out of your control.
Yeah.
And what makes or breaks is how you react to that.
Correct.
So the fact that you were able to just bounce back and go, all right, what's next? Brush it off, and just take it as experience perhaps. And, safeguard how you do a transaction moving forward.
Yeah, totally. At that time, you just have to sort of focus on your goals. Like, what do you want to do? You don't invest any emotion in these properties because it's not an emotional thing. You're not buying to live in it. So you focus on your goals, and then you just go on to the next thing. It happened. Try and get your money back, and then go on to the next thing as much as you can. So that was
You mentioned before that you had tried to do all this stuff by yourself.
Yes.
And it hadn't worked.
Yes.
And then you met Simon, and
yes.
8 properties later, it obviously twigged, something worked. Were you looking for that many properties yourself? Did you see that many properties as part of your plan or strategy?
Yes.
Yeah?
Yes. So I, and this is the planning we did with Michael, my mortgage broker. We planned out how many I could buy, and he set it up. And I remember he had it up on the computer because it was a Zoom meeting we had because it was during COVID and things like that. And he showed me, and I was like, wow, that's awesome. Are you sure I can really buy this? And I was like, yeah, you can. You can. And so we set the goal, and then I said, when can I buy them? He goes, you can buy them all today if you can. And I'm like, great, no worries, I'll get onto it tomorrow.
Yeah. Easy peasy.
Yeah, easy peasy. Yeah.
You just gave me permission. I'm right to do this.
Yeah.
And then I just remember like going through talking to agents. At that time, they were so busy. I mean, there was like a picture I had which showed like one house I went on the market, and within 24 hours it had like 14 offers or something ridiculous like that. And I'm like, how am I supposed to how am I supposed to get into contact with each agents and then try and bargain with them when there's like 13 people who've already made an offer greater than yours? So yeah,
it's interesting. Like even super hot markets, you can still get off markets. You can still find these deals.
Yeah,
so it's not just a lot of people assume that the off markets don't exist. They do, absolutely. Like most of them are actually terrible. I will say that. Like we get I see a lot of off markets every single day, but most of them are maybe just sellers looking to, get the highest price without paying for marketing, or maybe the house is like unlivable, or some other scenario where it's just not a good deal. But the ones that are good are genuinely good. So that's, I think, I think paramount, to growing a portfolio. But no, there's been a bit of a gap. So 2022 to now, what's been happening?
Life?
So, life, kids, work. So after we bought our last investment property, I think we touched on this earlier. We decided to. There was a bit of a dip in the Sydney market at the time, and we thought, hey, this is a great opportunity to maybe sell our PPOR and move into the. And my daughter, she's in year 6 now, and we were like, we need to get her into a good catchment, good school. So we need to move into a good catchment area. And so we did that. We sold our house, and then we found the house pretty much, close to our dreams. And we got the kids into the schools that we wanted them to go to. And next year she'll be going to the high school that we want her to go to. So that was so that was a good win for us.
And you've been renovating as well, I think. You've been spending a lot of time.
Yeah, because obviously
you're a Bunnings dad.
Yeah. I was
Every Saturday morning.
Yeah. I'm one of those people with a Bunnings hat and
but I think that's incredible because it just goes to show that you don't have to choose. A lot of people go, do I go down the investing path or do I go down the path where I, can realize my dream of having a dream home? You can have both, and I think you've shown it literally in the past 3-4 years that you've been buying properties. So it can happen in tandem. And, I think it's just amazing to hear that as well. A lot of people struggle with that. They get stuck on investing and they just keep going down the investment path, probably myself included. And yes, I guess you've managed to sort of stop and smell the roses, which I think is really important.
Yeah, no, thanks for that. I don't know, it's just for me, other people like to do the rent vesting. I kind of looked into that very seriously and thought, we can maybe do that. But I don't know, I wanted to own my own house. I want to be able to, be the Bunnings dad. come and, do things and, fix things and things like that. So,
did you go into this portfolio to did you leverage this for the PPOR?
Oh no! This came out of the blue. Out of the blue, I saw the dip in the market and I thought, hey, I think I can take advantage of this. Yeah, I'm gonna, there's, interest rates are going up. Yeah, and when the interest rates started going up, there was just that slight dip where I think people had a bit of fear, and I thought, okay, let's sell and then let everything drop, and then I'll come in and buy. But it didn't take that long after, and I just thought, I'm sick of looking for a house. Let's buy the one we like, and we found it and we bought it. And to be honest, after that, didn't matter what the interest rates did. Property prices, look at the property prices in Sydney today. They're going crazy. So did you go to Simon when you were thinking about getting the PPOR? Did you lean on him for any advice? I'm curious, what is it like when you've had people have this plan? Yeah. It's all being kind of enacted, what's going on, and then they go looking at houses.
Good on you. Like buying investment properties and buying a house to live in are chalk and cheese. Yeah. Right. The approach is completely different. And I get asked all the time from existing clients, "Oh, Simon, can you find me a house to live in?" I don't do it. I don't do it. It's not my skill set. My skill set is finding properties that make people money, and I'm just not that good at,
tugging on the heartstrings.
Yeah, exactly. People's emotions and all that kind of stuff. And, I think it'll do more damage than good because, if I failed at that, you might not, you might be thinking, oh, Simon's not that good of a person regardless. So, yeah. But yeah, it's just something that I even struggle with myself. From time to time I go out there and check out some houses that I might want to live in. But then I'm always like, oh, I don't like this, I don't like that. And
exactly.
Yeah, different skill set.
I walk into a house and I think it's brilliant. This is the perfect house. And Simon might walk in and say, this is terrible. Yeah. It's terrible colour. Look at the top.
Yeah, because it is interesting. I like that you've even split that up in that portfolio kind of thing, that you're not even really leveraging the investment portfolio to do what you want to do in your normal life. And that's a great distinction to have, I think, between the two.
Yeah, one's plenty emotion and the other one's emotionless.
Well, I remember you sending me a few sort of links in the area that you bought in and to live in, and you were trying to get my 2 cents.
Yeah.
And all I was coming back to you with, oh, this is a bad deal. Like the numbers don't stack up, and like you'll be overpaying and this and that. You should try and get some off markets instead. And you weren't too interested because you were thinking, oh, I really like this rumpus room or something.
Time to strike now.
Yeah, exactly. So
walk to the kids' schools.
So I'm glad I wasn't too involved in that process.
That's it was there's a lot of moving parts in that. Like your spouse, your wife, my wife. What does she want? And all the things. And at the end, we bought the house we liked. It was a little bit older and it was a little bit smaller, and we did some changes to it. Spent a little bit of money on it and made it a little bit bigger and more comfortable. So, yeah, that was a good experience.
And you mentioned you're still in the acquisition phase, the growth phase. So
Stage 2.
where to from here?
Where to? Okay, so maybe we can start talking about the SMSF stuff.
Yeah, so we're embarking on a bit of a SMSF journey now. We're planning to buy, I won't say how much, but multiple properties in the SMSF. Maybe even match what we've done in your personal names moving forward. So I think that would be a very interesting journey, and maybe midway or maybe even afterwards, it'd be really good to sort of catch up again and on another podcast and talk about the things that we've done there and the wins and the losses even. So I think that'll be super exciting.
Yeah, most definitely. It would be a pleasure to come back and talk about that once we've done it.
Yeah.
Yeah.
So some big things happening. It's definitely, while it looks like there's been a pause, there really hasn't.
Yeah.
You've not stopped at all.
Yeah, I don't know. My mind is always thinking about the next thing, the next thing to do and the next thing to be involved in.
I think taking action, if it, the takeaway from this is just you got to take action.
Yeah.
Make hay while the sun shines. So when you have the ability to buy, whether it's borrowing, whether it's like health, personal circumstances, mental capacity, do what you can, because, Huseyin went hard for a number of years and then he paused, rightly so. And then he focused on his PPOR endeavors and, there's been a bit of a gap as well, until obviously you're ready now again to go for your next sort of journey or next stage of your investing life. So it doesn't happen like one a year, every year for the rest of your life. Sometimes it goes all in one go and then you do nothing for a couple of years and then you pick up again. So, life happens at the end of the day. So you kind of have to just work around that, I think.
Yeah. And one of the reasons I've always thought about doing the self-managed super fund for many, many years. And one of the reasons is I remember back in 2008, the GFC, I was working, with some very good engineers who were very near retirement and they couldn't retire. I think that's sort of, that's the personal experience I had. And I sort of thought to myself, I don't want to be in that position because I can't control the economy. I can't control the next recession.
God, if you could.
If I could, I wouldn't be here.
No, you wouldn't.
No, I'm just joking. I'll probably. But yeah, that the self-managed super fund was like, maybe I can take control of this and put it into something. I'm not saying property prices will go down or up or whatever, but if you look back 200 years, and there's a book I've just finished reading, and it talks about the 18.6 cycles and how they work. And, if you look at the data, the back 200 years, property prices go up 14 years and then go down a little bit and then go back up. It's always trajectories up. So why would you put all your money into a super fund that is putting your money into shares that, and I've seen it firsthand, people who can't retire. So this is one of the, I guess, that experience.
The motivators.
Motivators. Yeah. So that's one of the reasons
Fear
why
and
I'm doing
opportunity. I think coming out of COVID, the narrative that I speak to people has changed a lot. Prior to COVID happening, early retirement, financial freedom, it will be a nice to have, but now it's more like a necessity, just in case something else happens, So I think the drivers for people achieving that is a lot stronger nowadays. And here you are. It's definitely achievable.
Yeah. And it's not just me. Anyone can do it. You set up your self-managed super fund. You just got to take action. You got to set your goal. You got to take action. Probably action is more important than the goal. And then you just got to focus. And then if you've got those three, you're on a winner. And then you end up talking to people like Simon and Michael, and then you end up on a podcast.
Yeah, well, I'm inspired. I think all of our listeners will be inspired too. It's been another excellent episode of Property Unfiltered.
Yeah.
As we mentioned on the outside, it's all about the real investment stories, the unfiltered, the raw, uncut, no BS about this at all. Simon, thank you so much for bringing Huseyin onto the show. And
Thank you so much for coming on. I've been trying to get you on for ages, but here you are.
Yeah.
So
No, thank you for having me here, and I hope your listeners learn from what I've done and take action, and hopefully they have their own success stories and come here on this podcast and talk about it.
yeah. So Simon, how can they reach out to you if they do have any questions, queries?
yeah, you can reach out to me directly, simon@housefinder.com.au, or you can call my mobile, but not on Saturdays.
No.
0415
Sundays.
I only call him on Saturdays.
But no, reach out, happy to chat. Looking forward to the next one,
Yeah, same.
Well, we hope you have enjoyed this episode. Like or review us on whatever platform that you do listen to your podcasts on. If you have any questions about this podcast specifically, editor@smartpropertyinvestment.com.au. Until next time, stay safe and well wherever you're listening from. And we'll see you next time on the next episode of Property Unfiltered. Bye-bye.